Hi, this is Simon with Trade and Perform Coaching, going over the trade review for April 28th, 2014. A couple things. The first thing I want everyone to kind of realize is that the trades I call out, it's to teach people how to trade. It's the whole purpose of this project is to teach people how to trade. Okay, and they're not trading recommendations. I have a high risk tolerance, a very measured risk tolerance, but it's high. Right, and I don't try to capture every trade that's out there, and I'm essentially not a trading service. I'm an education service, so keep that in mind when you're listening to my trades and how I set them up. So a couple of things. First of all, I went over the fact that we've been in a down market. NQ has been leading us to the downside, okay, and that's been normal. NQ, meaning the NASDAQ, has been leading us to the upside this entire time. Also, my primary objective through the course of the day is to capture the first moves into zones, and generally I'm able to capture 2 points out of the first move. Now, the last couple of months, specifically March, was pretty rough on the first touch of the zones, but generally speaking, on the first touch, they are a high odds trading opportunity. Okay. Secondly, when a trade comes into a zone for the first time, okay, and it misses by a tick, I generally consider the front of the zone tested and either look to the back of the zone if I can get tick divergence, or I pass on the trade completely. Those are a couple of things to know, and then generally speaking, my stop is 2 points behind the zone, and I will publish a video on that I have on my blog about the basics of using the zone. So this morning I had stated a couple of things in my trade plan. First of all, I was taking a trade into this area with this 2 point stop behind pretty much blindly. The trade is a good trade based on the current market environment, and I said I wouldn't be able to call it out in real time, but you could be assured I would take it. I took it and was paid nicely for it out of the gate. I got 2 scales, one at +2 and one at +5, which was essentially 1851 cover. I believe those were my covers this morning. I did not take the long, I just couldn't get reset quickly enough. Okay, so there was a couple of things going on in here at the time. First of all, this was gap fill. Okay, so it showed that we didn't have an incredible amount of strength. It was a potential open drive lower, but like I said, I didn't think the typical pattern has usually been something like this. Well, exactly what we had today, right? And then I was warning that in the afternoons we tend to kind of come back up. And the third area that I had a great concern for was that the counter rallies can be vicious to the upside. I've been warning about that for days. Markets rarely close on their lows. We were already very extended down here. So those are broader concepts, right? So the thing that most people have a difficulty with is 2 issues. First of all, keying off of the subtleties, but B, following a trade plan, no matter what that is. If my trade plan is to take the first trade into the zone, I'm going to take that almost every single time without doing a lot of thinking about it. Why? Because my research and my data have backed me up on that. However, the most difficult part where the most coaching comes in when I'm working with people is actually getting them from the point of seeing the trade to actually being able to take the trade, and not only that, but the consistency and execution day in, day out, day in, day out. I still maintain, I'll always maintain that you can get the majority of your work done by 11 a.m. You can get 1 to 2 trades a day, consistently increasing trade size over time, and that's all you need to build a trading account. I'll also say this, that's been difficult in March. It's been very easy in April. Someone told me the other day, one of my clients, I haven't gone back and added it up, but that every zone, first touch, first hour and a half of the day has produced a 2 point profitable rotation, or there was a few stops, but net over 30 days have produced approximately 44 or 46 points in P&L. That's significant, guys. 46 points per contract. Think about how much money is that? That's $500,000, $2,000 per contract traded. You trade 2 contracts, that's $4,000 a month. That's a lot of money, okay? So again, you don't have to figure out the entire market, whether it's going up or down or where it's going. just trade the rotation size, get the good stretches. In addition, as you're trading, okay, you can add arsenals. I called this trade right here is a trap trade for me. Okay, it's a complex trade. There's multiple ways to stop it in terms of risk management. You can increase or decrease size. It's a little bit harder trade to take if you have a small account. You're only trading a onesie. It's a little more difficult, right? But these trades work for me a high percentage of time, and they keep me from scampering from trade to trade or figuring out what I'm going to do. I already know what I'm going to do. It's just a matter of looking at how the market's trading and catching small nuances. One of the things I talked about, size of the rotation down versus size of the rotation up, right? And then I also talked about keying off of NQ in the morning. So we'll cover that in just a second. So let me go through where I traded this morning. I took a long here. I did not take this long here, although it was a fine entry, and I mentioned I would not be taking the gap fill. And even Globex low looked a little uncomfortable. I would actually prefer the Friday's lows for a long. And you can see we came within a tick right here to get that long. On the short side, I was looking at this 1872 and a quarter to 1874 and a quarter. And we simply missed the zone. Missed it by 2 ticks, right? So here's the way I look at this. Okay, I lost no money here. That's cool to me. If I'm missing the zone by a tick or two, so what? Right? There's a million trades, man. Even today there was a lot of trades set up. If you're putting yourself under pressure to capture every trade, man, you are going to be A, you're going to be a stressed out nutcase, but B, you're just not going to win. You're going to take trades that are mediocre. You're going to see things that aren't there. You got to be relaxed in your approach. And secondly, I have almost every portion of my entry and exit written out beforehand, and I kind of do a checklist of my entries and exits, because this trade right here is very different from this trade right here, both in time it takes to execute, the distance it can travel, and the stop required. Okay, totally different parameters. They both work. They're both high odds. They're just simply different trades. So I missed a trade. I didn't miss, but there was no entry here. I was sitting up here waiting for a short. This trade evolved into a trap trade, which I took and called out live in real time, and I scaled as it came down. I think my best scale was +6 here. And at this point, we were still pretty much showing a potential for balance, which we eventually got, but man, it took the hard way there. So what were some of the clues that we were going to continue breaking lower, or that this was not going to stick? Well, first of all, we failed to stay above Friday's high. That was a big deal. And then if you look at NASDAQ here, there's a couple clues there. First of all, failure to hold the gap, right? We got no responsive buyers there. We get short squeezed. We close below, Globex low, pop back above, and then we squeezed, but we failed to get above Friday's high, and we failed to get to this open gap that's sitting up here, a definite sign of weakness, right? Also, if you look at the rotation size, this is +30 points, and I had mentioned that I thought we would start to get a compression in the range of NQ, and the most recent range has been 3060. I do think that'll collapse back down to 1530, but hasn't yet, right? So as you're trading and you see this and you see it start to roll over, this thing started rolling over and was back below and trying to set traps by 9:45 in the morning. Okay, let's look at where ES has been in that same period of time. Okay, here's 9:45. ES is still hanging out here, okay? And the pattern has been and I pointed this out in the pre-market, right? NQ's been getting weak. ES has been hanging out for the rotation. I did this exact demonstration, right? NQ rolls over, ES follows. This is exactly the picture that we had right here, okay? And then look at the size of the rotation. This is essentially 1872, right? All the way down to 1845. That's just under 30 points of rotation, over 25 points, right? That's a big stretch, guys, to be pressuring your shorts. And then the other characteristic of the market is that people have been getting very quick to get short near the lows, and then they've just been getting smoked to the upside. This is a result of people who've been dogpiling one-way trades, up and one-way trades down, and they just dogpile them. And I got a feeling over the next couple of months to come, those guys are going to get bone crushed. Don't short in the hole. I would have considered all of this in the hole, okay? And don't short. And actually, I didn't exactly follow my own advice because I took it where we were trapping. Although it wasn't a very big risk, it was the end of the day, and I was hoping that we would kind of get a rotation lower. I kind of look at this trade later on and kind of was like, maybe I shouldn't have taken that. But I managed it well, importantly. The risk here, okay, was to swing high. In this particular case, I have 3 different ways of managing these trades, and this is how I chose to manage this particular trade. And then the mistake I made is usually when we trap at a prior day's high, we'll take a shot at making a move towards the prior day's low, which obviously 67 to 39 would have been a 27-point move. What I missed in that where my scales were probably a little aggressive, and I probably could have moved to the halfway point before taking my first scale. But no big deal. Bottom line was I managed the trade well to the downside. So in the afternoon, key. Okay, we got to this support level, and we got out of this zone in less than 10 minutes. I pointed out that that's a very strong sign. Same thing here. We just tagged it. We barely missed tagging the top of this zone. We came out of this zone in less than 10 minutes. This is what healthy rotations out of zones look like. Difficult rotations look like this. Okay, and I simply chose to move my stop to swing high. I probably, looking back at it, should have just moved to break even. No harm, no foul. I was fine. I did well. And then once I got stopped here, right, I got stopped on my trailer here one time, and I got stopped for a 2-point loss here on this trade, which, by the way, in the afternoon I trade smaller size, so it didn't have a significant impact on me. Okay, so here's the deal. I executed 1, 2, 1, 2. Didn't get filled here. 1, 2, 3 trades here today, and got paid on all 3. The 4th one I got stopped on. It was probably questionable as to whether I should have taken it again in the afternoon, right? But the point of that is I wasn't frantically looking for trades, chasing the trades, trying to capture every point. And if you can calm your mind for your entry, and you can identify what your trade is, remember, do I regret missing the 20 down or the 20 up? Nope, and let me tell you why. Most days and most traders can't capture them. I'm sure there's a few superstars out there that can. I guess I'm not one of them, and it's all right because I don't need to. I still banked fantastically today, capturing 5 points on this trade and a maximum of 6 points on this trade. That's awesome, man. That's 11 points. I'll take that every day. I'm usually happy with 2 or 3 points on any given day. But where traders have difficulty is they can't wait for the market to set up, and they can't distinguish one trade setup for the other, and mentally the executions become very difficult. And secondly, prior to the market making a move, they try to figure out what it's going to do. If you thought you could figure out the low, that this was the low right here, and that we were going to rotate up, I knew this was a weak zone. I called it beforehand, which helped me avoid it. But we could have bounced out of here and made a move higher. Same thing here, right? We could have come in here and just traded to the other end of the range and broken to the upside. The fact of the matter is I have no idea when I take a trade how far it'll go. That's why I scale quickly and let the market determine what my profits will or won't be. And then I don't get frustrated when I don't get fills here. I just go and look for my next setup. Okay, now this all sounds very simple. It took a lot of work to get to the point to be able to do this and mastering one trade at a time. So if you're struggling as a trader, first of all, depending on your size of your account and your resources, it's worth hiring someone who can help you through the mental side of the game. Trading is one of the few games where people refuse to hire coaches, yet you see people at the top of their games, the best golfers in the world, the best quarterbacks in the world. Tom Brady has his own personal mental coach. Tiger Woods has multiple coaches working with him. Kobe Bryant has his own set of coaches working with him. How is it that these guys who are top athletes and tops in their field spend out of their own pocket for their own coaches to improve their game. Yet we as traders won't go and look for extra assistance or help. Or even worse, a lot of the culture in StockTwits or Twitter is one that says paying for help or paying for services is a bad idea, and I strongly disagree. I have my own trading coach that I meet with weekly recently. Particularly, it was every other week, but March got real tough, so I started meeting with him weekly. And it's been a fantastic investment, and there's huge returns, and points out areas that affect my performance that I never even thought of. So it's not so much promotion for myself in terms of wanting to coach people. I have a good coaching load as it is, but it is encouraging those out there who are listening, particularly those with fewer than 2 or 3 years experience. A trading coach can take you to that next level in a quarter of the time that it would normally take you to do it, if you could do it on your own. And once you're there, they can keep you performing at a high level, and I can attest to that personally with my own trading coach. So learning the structure is one thing, but having your mental game on is more important. If you're upset that you missed this move, okay, and you're upset that you didn't get a fill here, it's highly likely that you missed this trade. Conversely, if you got fearful at the bottom down here and thought we were going to zero, you probably had a very hard time taking a trade here because the market was rolling over so hard. Okay? Conversely, the market, okay, running like this, and you became convinced that the market was going down here, and you kept fighting it all the way up. And I know there were people out there who took multiple trades to the short side in this thing, and they got bone crushed. Want to go take a quick look at the NQ overall. Okay. Okay, on NQ, you'll notice number one clues that help me with ES and in NQ trades. Failure to get to Friday's high. Secondly, you'll see that 30-point extension did find resistance. Wasn't a great setup, but it was an okay setup. We trapped, and then we went to the other end of the range. Perfect example there. Again, these setups are not that easy consistently on day by day, but that's the basic idea. We got below Friday's low. This was a huge warning sign. The inability to get back above here was a problem, and you can see how long they spent all of New York lunch trying to get back above, and when we came back from New York lunch, we finally panicked, came down into 3480, which was actually a support area, and got a very nice responsive buy. Now, there's two things you know. First of all, we got trapped back above here. As long as we held below this glove, this was a backside test, and I was kind of hoping we'd get a push back down and do this. Didn't happen. And that's the other part is you don't know. You don't know what's going to happen at the end of the day. And guys who shorted this, thinking we were going to roll over, got bone crushed. Congratulations to the ones who got the low and held all the way up. But there weren't very many who did. Okay. The next part that I want to point out, and I'll leave y'all with tonight as I'm getting ready to do the homework, and it's this. If we look at ES, okay, when you look at prior down cycles that we had, you can see that we got strong. First of all, a couple things before you think it's super bullish. We've had days where we've had strong responsive buys at the end of the day, get gaps the following morning, and pushes lower. This was the last, and then we got another super squeeze there at the end of the day. These end-of-day squeezes have been harsh. Number two, so, the point of that was just because we bounced today doesn't mean we can't have a strong downside tomorrow as well. Don't get overly bullish. Also, if you look at the process of the market going down or back up, okay, look at the examples that we've had recently, which are this. Pushes down, right? Squeezes back up, only to have a huge move back to the downside. Okay? Again, strong pushes up, only to have a huge move back to the downside, followed by big moves back up and big moves back down. I would really study this period of time in here because I think we're going to get a lot of this. Don't get locked one way or the other. Stay flexible. One other point when we go back to looking at extended downside moves, okay, if you look in this range here, right, we had downside moves, strong pushes back up, right, that only resulted in breaking and getting new lows. These reversals, okay, don't mean that we're going back to the upside. They don't mean that we're not. They just don't automatically mean that we are. Trade your structure. Forget your ideas on the market. Your ideas about the market do not matter. Look at all the guys on this particular day, right? Even if, let's pretend this was all one day. Guys that bought here got squeezed all the way up and they thought, oh, that's it, we're going back to the highs, and they got just kiboshed, if that's a word even, I don't know, maybe that was from my youth, just crushed to the downside, and then the move finally came. They're not going to make it easy, and they never do. So those are the final examples from tonight. I hope that helped. The key things that I would like people to take away from today is that, first of all, the first hour and a half generally provide great trading opportunities. You don't need all of this. You just really don't to build a trading account. Secondly, it's the mental execution and understanding the mental portion of what goes in to making the trade work and acceptance of the risk. Okay? Traders, too many retail traders try to figure out whether this particular trade will work, and it doesn't matter, and they end up missing a ton of trades. And what they end up doing is doing a hodgepodge of trades. I missed this, I'll take this, oops, I got stopped, now I can't take this. I'll take, the zone missed, I'm pissed off that I missed the zone by a tick. I'm going to take this, and I'm going to catch it this time, oops. Second trade in, get smoked. I know Simon warned about this level. There's no color here. It's not even a white zone. There's no color here, okay? And I warned that I would not take this zone automatically. I guess I should have lifted it completely. However, it was resistance. That's why I left it in on the way back up for the push back down. So you get frustrated and you say, well, I'm taking this trade here no matter what. Okay, it's over New York, just past New York lunch, excuse me, but still a difficult time of the day, right, till the 1 o'clock hour. And then you can see we finally get stretched, and I said in the market preview, I'm taking a trade here. Why? It was a huge downside stretch, right? Go look at the stretches from the other days where we've been getting responsive buyers, and pow, you had a nice payday if you could figure out a way to make it stick. I probably should have gone with swing low on this instead of, well, the issue was I took it right here at the top. Where did I take this trade? Because I got stopped. Oh, I did take it here at the top, got my 2 points right here, and then I got stopped on the way back into the zone. No big deal, and I just simply didn't want to take it a second time, and I was getting mentally tired here. And then the last piece was I took a stop here, okay, and to myself I said, okay, well, I've taken 2 stops now. One was, basically for still a profitable trade on the first one. The second one was a smaller loss than I had projected on reduced trade size. And I said, there's no need of me fighting this thing if it's going to go all the way back up, even if it's just a short squeeze. Why? Because tomorrow's going to come back, and all of this, again, will turn out to be pretty easy for me. So work on your mental game. If you don't have a good mental game, get some help, okay? And don't blow your accounts up. That's all I can encourage y'all to do. Don't blow them up. It really sucks, blowing up a trading account, and not necessary. So anyways, my name is Simon. I'm with Trading Perform Coaching. If you need some help, if I'm not the guy to give it to you, contact me. There's a lot of good guys. I'm happy to refer you over to someone who fits your trading style and personality. So have a great night. We'll see you tomorrow morning. Please join me. By the way, the pre-market trade review, I will start charging for that. Have not finalized prices, but I will start charging next month. I have not figured it out. I will go and do the math tonight and talk to a couple of my coaching clients and see what is reasonable. But right now we are looking at approximately about $95 a month, right, for the trade plan, the market preview, and then obviously The trade reviews will still be open to everybody at the end of the day, and I will be publishing the charts a little bit later in the morning, so that my trading clients, the ones who are paying for the pre-market preview. Wow, I'm getting tired. The market preview, right? Will get the full value out of that, and those who don't pay won't. But I really think I've been delivering an exceptional product and an exceptional trading plan. And I don't know anyone else at that price point that's gone through and given the amount of detailed look at how the day could unfold, both through difficult markets and good markets. So I welcome any feedback y'all like to give me on that. You can reach me at tradeandperform@gmail.com, and I shall talk to y'all hopefully soon. Have a great night.